Welcome to your Fortune Friday Ask Me Anything series. I'm Priyanka Bhatia from Women on Wealth, and today I've come back with two questions that you guys have sent in. So let's begin answering them and let's help you create wealth, take charge of your finances. So the first question that I am taking is from Sonika Kodwani, and she's saying that if someone wants to switch careers, then how much corpus needs to be built to take this plunge? So I'm repeating this question. She's asking that if someone wants to switch careers, then how much corpus needs to get created to take that plunge? So number one, so there are a couple of questions that I have on this question. So number one, when you are saying that you are switching your career, are you talking about switching in terms like you will stop working for some time and then you will take up a job? Is that what you're saying? Or are you saying you will stop working for some time and then you will build a business? Now these two scenarios require different kinds of planning. Okay. So say you're making this career switch. So from one job, you're going into a little bit of sabbatical and then to another job. If that's your case, then you need to build the fund to take care of the time when you're not working. Okay. So you need money to take care of yourself when you're not working. So if you have loans, then you will add EMIs to it. If you have monthly expenses, your household expenses that you take care of, then they need to get included. If your child's education, the school education, whatever he or she is into right now, if that is what is funded by you, then you need to put that in. So basically you need to look at your spending, current outgoings, and estimate that for the time when you are, in that transition or you are, not working, what will be your expenses and how much money you need to collect right now to take care of that period. Now say you're switching, and when you are switching, like you get into a not working phase and then you get into a business. So if you're getting into a business, then business takes time. Okay, it will take time for any business to break even. What is break even? To where, a stage where whatever expenses are going in the business, running of the business, they are being met by the incomings. Okay, when that is the case, then, it will take time for any business to break even. Generally, I've seen it takes 5 to 7 years for any business to break even. Okay, for any business to become profitable, you could, use it like that for any business to become profitable, you need that time. So then you need much bigger a fund if you are building a business. Okay, if career switch for you means that you're going to go on a sabbatical and then you're going to build a business. So the amount will be much larger if you're going to build a business. And remember that there is an initial investment that needs to be put in place to build that business, and then business requires money over time. So do factor that in. So it's not just collecting a fund to run your personal expenses, household expenses, but it's also the business expenses. Okay. So if you're not taking funding to run the business over time, you want to bootstrap, then you need funds to build that business too. So while, this calculation will depend, from person to person. So nobody can give you a figure that, okay, this much amount will be enough. No. To each their own. Everybody's expenses are different. The kind of business we want to build is different, right? We are in different situations. So we need to calculate how much personal expenses, household expenses we will need. And if you're going to get into a business over time, then you need a financial plan for that business too. And always remember, if you're going for a business, you need a plan B as well. Okay, because it's not easy. So now if you look at this question, okay, I want to train everybody in how to think. So if you look at this question, I'm going back to Sonika's question. She's asking if someone wants to switch careers. So there is a bit of a goal. This is a short-term goal that she's talking about. See, I'm decoding this so that each one of you can begin to think. Okay. So you got to always come from the goal. So she's saying if someone wants to switch careers, how much corpus needs to be created, okay, to take the plunge. So there's a goal, and now we are saying with where we are right now financially, how much money do we need to fulfill on this goal? Okay. So this is how you need to start seeing your finances, your financial life. Always note you need to have clarity on your financial goals. If you don't bring that in, nothing is going to shift. Okay. So that's first question, and let's see who all are typing in here. Okay. Arokya, hi. Okay, ask me anything series is so exciting for you. I'm glad, Arokya. That's so. Warm welcome. Hi, Usha. Okay, Kaveri. Hi. Hey, Seema. Hey, Rakhi. Welcome. Rakhi, I'm seeing you after a very long time today. Hi, Mukta. Yes, Kaveri, we will come to your question in a bit. The next question I'm taking is yours. Thanks for typing this in. Okay, Usha, you have a question too. Let's see if we have time, we can answer it too. So let's go to Kaveri's question now. So Kaveri is saying after the age of 75, if all financial pillars are in place and a basic income is there, where can one invest and park their savings in a way that it can attract minimum tax and still not lie idle? Okay, I'm saying it again. She's written it also here. What are the best instruments to invest the savings of a 75 years aged woman who doesn't need immediate monthly income from it for a few years? Okay, brilliant. So the goal is clear? No, the goal isn't, right? Can you see, Kaveri? You've not written the goal. What is the goal here? Why invest? Why does this 75-year-old woman want to invest? What's the goal? Unless the goal is clear, no investments, no financial planning can be done. Okay, now I'm assuming that, let's say, because you're saying that there is basic income which she has and she doesn't need immediate monthly income. So that's not the goal, right? So which means generating an income from that fund is not the goal. Now, the goal might be leaving a legacy. Okay, I'm now just hypothetically, I'm just making up stuff. Okay, now say the goal is leaving a legacy. Now, when you're leaving a legacy, where do you invest? Now, you don't invest in instruments that don't beat inflation, because you already have an income coming. Now, if the income is coming from fixed income investments, now I'm just making up more stuff, okay, because I don't know her current financial situation. So, one, I came up with a goal. Two, I'm coming up with the current financial situation of the woman. I'm assuming that's your mother, okay, or your mother-in-law. So, say in the current financial situation where she is, where you are saying there is no need of immediate monthly income, we say that she already has invested good amount of money in fixed income investments. Say there is money that's invested in post office monthly income scheme, senior citizen savings scheme. Say there are fixed deposits which are giving her monthly interest. Now all these are investments which have happened in fixed income. Okay. Now that's the current situation, and say more money is just lying in savings and fixed deposits, which if put to good use can help her build a legacy that she wants to leave. Now if that's the case, then what are we left with? It's equities. Okay, but when you are 75, then you need to balance. Okay, you don't need to put in a lot of money in equities. So that asset allocation comes handy. Okay, like how much percentage of her money should be invested in equities and what percentage should be lying in fixed income investments. Or fixed income, guys, people who don't know, fixed income investments are investments where the capital, the money that you're investing is absolutely protected. Okay, the returns that you're generating may not beat inflation. So generally, how I would say when I am 75, how I would like to see my asset allocation, it might be say 30% in equity, okay, and 70% is lying in fixed income investments, savings and fixed deposits. So that's the kind of asset allocation I could see. But another way of looking into this, Kaveri, is if we just take the age out of the equation. Yeah, I'm just helping us think, okay, brainstorm in various ways. Say we take age out of the picture, and now this person has income coming in, the financial pillars, the financial security is already built in. And now how would this person invest? If, it's me then who has good knowledge and good understanding of mutual funds and companies and investments, then maybe, given the skill that I have built over years, my asset allocation towards equity will be higher. But then again, it really depends on the person's skill set, okay, and how passionate she is on building that legacy. So yeah, these are some of the thoughts that come to my mind. Okay, Kaveri, I trust you got supported. Okay, Usha, you were saying, what is the best way to clear bad debts as soon as possible? Two ways, okay. One way is start taking the loan, which is the smallest one first. So go from the smallest loan to the biggest one. That's first method, okay. When you take the smallest one out, you get, a lot of, I think positivity, motivation, inspiration, what do I call it? Okay, you really feel like an achiever that, okay, you've taken the smallest one and then go to the second one, the third one, the fourth one. So that's one way of paying off bad debts as soon as possible. The second way is make a list of all the debts and write down what is the interest that you are paying on each. The highest interest one you tick first. So the loan on which you are paying the highest interest, you start paying that off first. So these are two methods, and I'm sure there are videos that you would have seen which are right here on our Instagram page, Women on Wealth Instagram page. You will find on debt, and you can check them out. They're also in the Money Gym course. So I trust you got your answer, Usha. Hasmita, is it a good idea to invest in startups through different platforms? Well, there are many investments which are available. So Hashmita, before you invest in startups, I want to know, have you built your retirement fund? Have you written your financial plan? Do you have your goal planning absolutely done? Do you know the art of financial planning? Do you know the art of building a well-diversified investment portfolio? And then there are many investments which are many decades old, which have a huge track record of making money for their investors. So before you jump to investing in startups, I would recommend that you invest in investment instruments that have huge track records. So go for them, okay? And then if you still have money left and you've reached your financial goals, then yes, it's a good idea to look at startups or cryptocurrencies or NFOs or NFTs and all these things like that, okay? Okay, Gunjan is saying, Kaveri, how about bonds? They are safer than better returns. Got that, Kaveri? That's your mother. Goal assumptions, right? Sure, got it. Okay. Enigmatic, you're saying, how do I choose good SIP plans? Okay. So, just correcting this question a little bit, okay? You don't choose the good SIP plan. So, SIPs SIP's full form is systematic investment plan. So when you're investing in mutual fund, you have two methods. One is the SIP method, systematic investment plan method. Another one is lump sum. So when you are investing in one go, that's lump sum. SIP is systematic investment plan. Systematically, you're investing in mutual funds. That is the SIP plan. Now, how do you select good mutual funds? Okay, that's the question. Because there are these two methods of investing in mutual funds. If you choose lump sum, you lose the opportunity to average out the buying price. Now, if you lose the opportunity to average out the buying price, you're at a loss, because this is the stock market. It is volatile. It goes up and down. So the best way to invest in stocks and in mutual funds is to follow the SIP route. And if you're following the SIP route, now it doesn't mean that you can invest in any mutual fund, because 99% of mutual funds, 99% of stocks are not performing well financially. It takes us at least over 4 hours in our Money Gym program to explain how to select good quality mutual funds and invest in it on your own without depending on anyone in our lives. So yes, we do not have that kind of time right now, but yes, I will help you get an idea of some of the starting steps for this. So number one is, you will choose the category of the equity mutual fund depending on your goal. Next, you will look at who the fund manager is, what's the kind of asset allocation the fund manager has done, what is the kind of portfolio that the fund manager has built, what's the expense ratio, what are the risk to reward measures, etc. Now, it may be that as a beginner, this was like, what is she saying? I don't understand this. What does she mean? So if you felt that way, then exactly that's what I'm talking about. It takes us quite a lot of time to explain the step-by-step methodology to pick good quality mutual funds. So if you want to learn it, please come to a free introduction to the Money Gym program. It's happening on Sunday at 11 a.m. So just DM us and we will be happy to book your seat for you. Okay, Kaveri, you're saying it's only the age that's holding you back from equity. But Kaveri, no matter what the age is, we got to be investing in equity, right? Or we got to stay invested. In our case, we will stay invested in equity, even if we are, say, 70, 75, because, because that is the only amount which is going to beat inflation. There is nothing else right now which is beating inflation. So Kaveri, maybe you wanna for some time take the age out, then maybe that is a method which will work for you. Okay. So Usha, what if the biggest loan has more interest? Then you start picking that first. See if that makes more sense to you. Okay. If the method of debt repayment that you wanna pick is that you wanna pay the loan with the highest interest first, if that's what you wanna do, then even if it's the biggest loan, then you begin paying it off first. And if you want to use the second method where you are taking the smallest loan first, then do that. But choose one method and then go for it. In the Money Gym program, Usha, that you are a part of, okay, we invite women to create a debt repayment plan. So create a debt repayment plan, and I'm right here to support you as your group coaching begins tomorrow. Okay. Right, Spanned. My thoughts on crypto in asset allocation. It should be 0. Cryptocurrency at this point should be 0 asset allocation for beginners. So if you are a beginner, then it is 0. There are many investments which are decades old. They have huge track record in making money for their investors. First, we should be investing in those investments. Well established, financially sound investments. Once you've invested in them and you've built a very strong, robust financial foundation for yourself, then you should go for cryptocurrencies or other investments. And also, I would like to point out that today, just in the morning, we decoded the Economic Times newspaper, and 2 articles that we spoke about were on cryptocurrency. Charlie Munger saying that, cryptocurrency should have been banned long time ago, and another article saying how the D company, Dawood Ibrahim company and his associates, how they are dealing with money laundering thanks to cryptocurrency. So if you've not seen the decoding of the Economic Times newspaper that we did in the morning today, please go over it. The video is right here on our Women on Wealth Instagram and Facebook pages. All our pages have that. So if you're on LinkedIn, YouTube, Instagram, Facebook, you will find the video which we did in the morning, the live. Please look that up. Don't jump just because there is a lot of buzz around it, just because there is a lot of noise around cryptocurrency. You don't invest in cryptocurrency. As beginners, you first learn the first few steps. You take the first few steps, which are goal planning, financial planning, building your investment portfolio, building investments which have huge track record. So don't miss the steps of beginners. Don't try to take that quantum leap, because otherwise you will fall flat. That's how it is with finances. It's like building the building. Okay, it's like constructing a building. You can't construct the first floor without building the ground floor. It has to be done together. Okay, that's how it is. Please do not make the mistake. Usha, you have choices. Which one to clear higher interest debt? But what is possible way to invest to clear it? Is it only RD? Yes, Usha. So if that's your now again, Usha, one goal you have is debt repayment. Okay, the method you're looking for towards that debt repayment will come from whether this is a short-term goal or it's a long-term goal. Now say the goal is long-term, which means you're okay about paying it after 7 years. Now in that case, you can even choose high-quality equity investments. You're in the Money Gym program, you are learning the step-by-step methodology to pick good quality mutual funds. Okay, and if those mutual funds, and say you're also investing in stocks and other investments, say if those investments, okay, are generating a return which is over and above the interest rate that you're paying, then that's it. Your life is done. Okay, I think it just went off. So the point I was making, Usha, was, can you decide if this is a short-term goal, debt repayment, long-term goal? If it's a short-term goal, then yes, you will be doing a recurring deposit or liquid funds. These are 2 methods. Okay, you may also look at arbitrage funds, but then I'm not sure why take so much hassle around it. Okay, these are the 3 ways that show up for me right away. And well, in the program just today, Usha, I have added a video on how to reach your short-term goals. Okay, so you have those video recordings available with you, and it's in the financial planning section where I've put that video. So check that video out and find your answers. Basically, if the debt repayment is a short-term goal, then it's RD, liquid funds, arbitrage funds, very short-term period. Now, if this is a long-term goal, then yes, you can make money in equity. The returns from equity can be higher from the interest that you're paying on that loan. And this way you can make money, multiply it, and pay off your debt faster. So you got to decide short-term, long-term, how much time horizon you have for the goal. Okay, Namrata, is it good time to invest in land or house? Will the real estate market be good? You're in Mumbai. Well, Namrata, if you look at real estate, it has always been a market which has very long cycles, right? I mean, real estate from 2000 to year 2008 was booming. Until 2011 also it was fine. But then from 2011, actually 2012 to now, nothing much has moved in the real estate market. And if you want to buy a house to live in and you've done your financial planning for it, you can see you can afford it. Example, if you can see that yes, you will be living in this house for at least 10 years. The EMI is not over 30% of your take-home salary, household take-home salary. And if you have the emergency fund absolutely built, that in case, any of you lose your job, the main breadwinner loses the job, then at least you can manage to pay the EMIs for at least 6 months until you can find the next job. So if you have these basics clear and you know how to manage your money effectively well, okay, and you have certain investments that you've done which are generating good returns, with which some aspect of your retirement or child's higher education can be funded, if you can see all of this in place, then yes, it might be time to buy your own dream house, or if not the dream house, at least the house you will live in for the next 10 years. Go for it. Don't worry about the real estate market, provided it is you buying a house to live in. If you're looking at buying a property just as an investment, then well, the rental yields are not great. They're hardly 1-2%. Also, the capital appreciation is not much. It's an illiquid asset. You cannot liquidate it right away. So it's not an investment that you can do to generate wealth. That's not how it is. Okay, Namrata, you think the crypto is the future though? Let's see. Who knows what it is? Okay, I can see some more questions, but I am losing time for today. So next time, guys, okay, it's about to be 5 p.m. Next time, definitely, please make sure that you send in your questions in advance so that I can, I can just come and start answering all of them. That way it saves time. So please make sure, look out for the post on Ask Me Anything series. Make sure before Friday you send me all the questions so I come and I can answer all of them back to back. We save time and you guys are absolutely, kind of acknowledged and you're taken care of. So let's take that on, okay? And for today we close here. Thank you so much for being here. Thank you for participating. It is my absolute joy to be contributing to each one of you. I will see you now next on Monday for the Wake Up Women series. We have yet another woman who is coming in to share her financial transformation journey. And before that, on Sunday, we have a free introduction to our flagship Money Gym course. So if you have not attended it, I highly recommend. It's a 90-minute free introduction. Come in, just DM your details, contact details, and our team will reach out to you and support you in booking your seat for this free introduction. Take charge, stay safe everybody. And now I see you on Sunday in the free introduction and on Monday with the Wake Up Women series. Loads of love. Bye-bye. Thank you.